Good morning, good afternoon, good evening, depending on what time you're watching this. This video, we're going to be talking specifically about market displacement, tailored more so for beginners, and getting a basic understanding. Hopefully, you're watching this with some form of prior understanding because that would overall make this video easier to digest. Before we jump in, we got to understand that not all candles are equal. There has to be context to each candle. Every candle moves for a reason. Think of it as like a story. Each candle is telling you a little bit more of the story as it plays out. And one of the stories that we're going to be focusing on is the displacement candle. So, what even is a displacement candle? What even is a displacement? Displacement happens when one large candlestick takes out a swing high or a swing low, showing a strong displacement. To the right of it, we have a bearish displacement example to drive the point home. So we see the market created a swing low here, and then shortly afterwards, we get a displacement candle taking out that low, giving us a strong bearish displacement. That's it. No need to overcomplicate it. That's what it is. A displacement is one large candle showing strengths in either the buy side or the sell side. In this example, this displacement is showing strength from the sell side, making this a strong bearish displacement. And you're probably thinking, okay, a displacement candle is one large candle that goes really far. Well, what's a swing high? What's a swing low? So that's what the next slide is about. What is a swing high or swing low? A swing high is a three candlestick pattern. Super easy, super easy. With the middle being the tallest, which is this candle right here. And the candles on both sides are a little lower, which is right here as you can see. It's shorter, taller, shorter, making this the swing high. And it's the exact same thing for a swing low. It's a three candlestick pattern with the middle being its lowest and the two candles on the side are a little higher. This is what created a swing low, and this is what created a swing high. Super easy, three candlestick pattern. The more you do it, the better of the understanding that you will have, and the more it'll become intuition. You got to keep in mind, you're brand new to this. There's a lot of new terminology that you're gonna start to hear, start to understand, and I'm trying to give it to you in its most simplest term without overcomplicating it. In a swing low and a swing high, it's a three candlestick pattern with the middle being its tallest or shorter and the two being on the side being shorter or higher depending on which one. I don't know how I did that. Let's go ahead and skip that. So here we got is a bearish displacement example where we have a swing low, and if you're in a bearish bullish market structure, this would be considered a higher low. Price comes up, comes down a little bit, strong displacement candle taking out this swing low. This is showing us strong bearish displacement. We have the swing low here that's formed. Three candlestick pattern. The middle being the lowest. One to the left, slightly higher. The one to the right, slightly higher as well. Price goes up, comes back down, creates another one right here, another swing low, if you peep that. Middle being the lowest. The right candle of it is being slightly higher. The candle to the left of it slightly higher as well, making this a swing low. This displacement candle not only breaks this swing low, but also this swing low, showing strength from the sellers. This is a strong, it takes out both lows, strong displacement. There was little to no resistance on the way down, showing massive strength from the sell side. This is the exact thing that you would want to see in a displacement if you were bearish for the day. And why displacement matters. One of the things that I come to understand is that displacement is super important for my strategy because it gives me the awareness to understand if the current trend is going to continue or is it going to reverse. Displacement gives you an idea of who's in control or who's about to be in control. Once you're able to really understand displacement, it changes how you see the chart intuitionally, instinctively. You're able to look at these candles and immediately understand what price is doing. At first, it will be a little tricky. It's going to be a little difficult to get a better understanding of what it is that's happening. But the more you replay the same videos, the more you put in practice reps, the easier this entire thing becomes. It helps you avoid weaker moves, fake outs. You start to understand the strength and weaknesses behind each candle. You understand the story that price is trying to tell you. And once you understand that these candlesticks, they're just storytelling, you will start to become a phenomenal reader. But you have to understand what you're reading and why you're reading it. Displacement is one of the most important things, especially if you're like trading off of liquidity. You want to see that displacement happen after liquidity is getting taken. You want to see a reversal. So you're going to need these displacements if you're trading reversals. You know, if you want to see continuations, you got to understand what displacement is in case it invalidates your trade. There's many different ways you can use displacement. You can either use it to validate your trade or you could use it to invalidate your trade. You could use it to understand what the market structure is currently in, who's about to be in control, and understand when that shift is actually happening and it becomes intentional, not randomized. You become intentional with the market. You move with the market as one. You align yourself with the market once you start to understand the displacements. You could be in a bearish structure, price is going down, but you have to understand at what point, what needs, not necessarily what point, but what needs to happen for the trend to shift. There are steps to that. Price doesn't just come down and immediately rallies up. Yeah, it happens, but while it's happening, there's clues that are left behind. Excuse me. There's clues that are left behind to let you know, like, hey, we're about to switch in trends. You should pay attention here and see what happens. Excuse me. Wow. I'm very gassy at the moment. I'm a little cold. In case you could tell, like, I'm a little shivery in my tone. It's a little cold here in the winter. But that's why this placement matters. It shows you who is in control and when that dynamic is about to shift. And guys, this is simple. Something that I like giving multiple warnings on nowadays, that displacement is not a trade by itself. Don't go in there and you see a strong displacement candle and now you begin to start trading price. You start chasing price. That's not the right way to do it. Strong move doesn't mean instant entry, because a strong move can just be a fake out. You know, displacement only gives you context to what is currently happening, what is currently about to happen. You still need other confluences. You need structure with your strategy. You need timing with your strategy. Not just strong move, click a button, buy, enter. No, that's how you lose money. That's how you burn out. And you end up not doing trading to a level that you actually wanted to do. So always keep that in mind, is that Displacement by itself is not an entry signal, but necessarily a confluence that validates your trading strategy. It's just a confluence. There's still more things that need to go about it. Now that we understand what a displacement looks like, why it's important, what a displacement necessarily means, let's go look for a quick live example to see where market structure has shifted and shown a clear displacement. Let's go ahead and jump into trading view here. So we can see we have one right here. Super quick, super easy. Oh, I'm gonna see if I slow it down. We have a swing low here. Multiple displacement candles. Look at that. That was a strong candle. And guess what happened? Price continued to rally right after that. And if you go to a lower time frame, there's probably somewhere an entry that formed in this candle. These two candles right here. 9 a.m. to 9:30 a.m. Guarantee you there's an entry in there. But the point is simple. Displacement happens when a low is taken out. This was strong displacement. As you can see, those wicks had little to no resistance going to the upside. It had little to no resistance going to the downside. It had a lot of resistance going to the upside and little to none going to the downside. Price came up, but initially continued to rally down. Okay, let's look for a different example where, oh, look right here. This is everywhere, guys. So this is a swing high, 3 candlestick pattern. The two on each side are lower than the one in the middle, making the middle candle's highest point a swing high. And what do you see here? Strong displacement candles. These are the two displacement candles here. This is a weaker one. This is a weak displacement candle, but it was still strong enough that it broke. But the next one that comes after that, strong. All right, let's keep looking for more. I mean, they're everywhere, guys. We could even look at this one that's right here. Let me turn this magnet off. We have a swing low right here. And then we have a large displacement candle right here, breaking cleanly below that low and closing below it. Clean displacement candle. Price is in an uptrend. Price created a low. It even created a low right here as well. Price broke above it, broke below it, showing strong bearish displacement. This is the beginning that market is about to shift. Breaks this second low and rallies down. If you're bullish, you want to pay attention No. If you're bearish, you want to be paying attention to market structure lows being broken. And then when you're turning to be bearish, okay, I'm messing this up. When you in a bearish bias and you're looking to go short, you want to make sure that these lows are taken out, and it gives you a confirmation that we are in a bearish market structure. Like, for example, if you're here Friday, you're going to be looking for long opportunities until price breaks below this low and shows a strong displacement, which is right here. This is the first low that got completely destroyed by a displacement candle because this was large, breaking down that swing low. Displacement candle, taking out that swing low, giving you a clear indicator that price is about to switch on its ass, and you can start looking for short opportunities. And vice versa. When you are bearish or bullish and the market structure is currently bearish, you want to wait until these highs become taken out And once that high does get taken out, what do you see here? Strong displacement candle, showing you strength from the buyers. So you can be expecting price to continue to go higher after this. And what it does, it comes down, retest, fails to make a lower low, rallies up. It's super easy, super simple. Don't overcomplicate it, guys. It's the easiest thing here. A swing low gets broken. That just shows us displacement. When market structure is bullish and it's creating a swing low and market breaks down below that low, that just shows you right there that there's a strong displacement candle taking out a swing low. Thank you guys for watching. Hope you learned something new. And if you have any questions, any concerns, let me know. We'll go ahead and work around that. Thank you. Bye-bye.